Hello, everybody. Welcome to my Chapter 10 lesson overview. The intent here is to be very brief and just simply give you sort of a recap of the module, how it's structured, so you can actually approach the homework correctly, but also to give you sort of some insights and key points about the chapter itself, Chapter 10 in this case. So here are the topics of this presentation. I'm first going to give you the topics themselves, structured or organized by learning objectives or LOs. Then I will recap what you already have seen through your orientation last week, and that would have been the module itself, how it's structured. You have a lesson overview, you have some notes, some videos, some other resources that are already inside of your pages in the module, and homework keys as well. Then I'll go right into the topics themselves. As you see, there are basically three sections here, and it says there 70% of your time, but probably even more than that, should be spent on the first three, LO1 through LO3, which is costing, meaning how you account for the cost of the purchase of a plant asset, depreciating the asset, and then eventually disposing of the asset. Now notice that LO7, or the Appendix 10A, is actually related to LO3, or disposals. It's just that it's talking about specifically a type of disposal called exchanges. So again, most of your work will be related to these three parts that relate to the accounting for a plant asset. If you go on to LO4 and LO5, it's similar to what you've done in the first three learning objectives, but now as it applies to natural resources and the intangibles. And the last one, LO6, is only a financial statement analysis, very brief section, which I don't really focus too much on. There may be a question here and there on this, because we're going to be talking about financial statement analysis in total later in the term inside of chapter 7. I think it is. So we'll be returning to these things later. So I don't focus on all that much on the performance sections in each chapter. Now going to the topics and LOs, as you know already. Again, I already gave you sort of an overview of those topics, but here's more detail. Again, if you could look at LO1, you're measuring the initial cost of the purchase of an asset. I call that an acquisition. And there are three ways that happens. You have an initial purchase. You have a lump sum, which means that you have one purchase amount. It applies to several assets, or at least two assets or more. There's also expenditures that you incur for assets after you place them in service. And so how do you deal with those? Are those expenditures just expenses that just you place into the income statement as operating expenses, or are they part of the asset, and so you would have to, in that case, capitalize the expenditure, so it becomes part of the asset as opposed to reflected in the income statement as an expense. And so that's an important section to really understand. It's more conceptual than anything else. LO2 is depreciation, and in that case, the accounting itself is very easy. You debit expense, in this case depreciation expense, and you credit accumulated depreciation, a contra asset account. But the difference here, or the complication here, is actually more about the method you use for calculating the depreciation. So you have three methods in this section of the book: straight line, double declining balance, and units of production. And then you go to LO3, and again, I mentioned this before, that you have three ways to dispose of an asset. You simply just throw it away or discard. You sell it, so you get something in return when you get rid of the asset, or you exchange it, you trade it. And again, that's the same topic as in, or the topic from Appendix 10A or LO7. The other ones are the same as I mentioned before. You've got LO5, or actually it is kind of backwards there on the slide, but as you know, natural resources is LO4, and intangibles is L of 5. I'll talk more about it in a second. The module 10, as with other modules, you'll see starts off with a chapter overview. So it has sort of an initial sort of summary and an introductory video coming from Mal. That to view all these videos on my module that do come from Mal, you need to be signed into Mal within the same browser, or the links won't work. In that case, you would have to just look for the video on your own inside of the Mal, your Mal account. Then, if you, one thing I didn't mention this, but inside of this lesson lecture notes tab, you would have obviously lecture notes that relate to each of the learning objectives. So you go there, and to go there, you either click here on the lecture notes link, and you will see some links on the right side of the page here, so you can go them directly either way. Okay, you can navigate pretty easily. Homework. The homework here lists all the homework items in the back of each chapter by learning objective and by type of homework, and only the ones that are assigned do I have a link to them, and that means that there's an underlying page with the answer keys to each of those problems, so you can learn how the problems were solved, so that when you go to the homework inside of Mal for the actual grade, you know how to solve them. So you can use the modules here, or you can use the resources inside of that Mal tool. Either way, you should learn how to solve these problems, because the Mal will actually feed you the very same problems that were assigned, but they will give you different numbers each time. Inside of the module itself, in the homework, you also have some videos and some other handouts you may find useful. With respect to the actual chapter highlights and key points, I want to just go and give you something to focus on by learning objectives. So the first slide here talks only about LO1, measuring the cost of the plant assets. And again, there's the different ways of doing that. So you have an initial purchase. Oh, by the way, I want to mention this item here. It says plant assets, depreciation, and disposal. The whole chapter is really formatted in a way that it actually talks about accounting for the life cycle of an account, in this case of a plant asset. So you first set it up, that's when you book it, when you purchase it, then you do something in between. In this case, you're going to be depreciating it, and at the end, you're going to get rid of it. You're going to eliminate the account from the ledger, and in this case, you would call that a disposal. So that's kind of the life cycle of an account. In this case, again, life cycle of a plant asset. So that's the reason you have that line item here on this slide. In terms of the definition of, or at least the guidance, the principle that you follow as to what you book into the costing of an asset purchase, you follow this. This is very useful, very important to always remember. All costs associated with getting the asset, the plant asset, ready for use, you include in the cost of that asset. So it could be delivery, it could be installation, it could be taxes, other things going into this. It's not just the pure cost of the asset itself. The other thing that this talks about is some examples of what are plant assets. You have land and land improvements. They're not the same thing. Land is basically, you can think of it as a space. Land improvements is more of a added on, such as fencing, lighting. That would be a land improvement. Notice that you have some exhibits within this slide. You can always, when you're playing it, you can always click on those links, and it will take you to some exhibits. There's buildings, machinery, equipment, furniture, and so many others. You also notice that D talks about lump sum, and there you'll be using something called the relative sales value method. So you can allocate based on a proportion of the appraisal value of a single asset to the total. And again, it's very mechanical. You can probably learn on it on that on your own by reading the book. And finally, you have again, as I said before, capital or revenue expenditures. That's when you incur an expense after you place an asset in service. Is that an expense into an income statement, or you capitalize it into an asset account? Make sure you understand the difference between those two. LO2 is depreciation. Here, straight line is even uneven allocation of the cost of the asset over its useful life. And notice that depreciation is not what you may think out there in real life. It's not loss of value. It's not obsolescence. None of that. It's purely in accounting. It's purely the allocation of the cost of an asset over its useful life. That's it. Nothing more. In terms of how you allocate the cost of the useful life of that asset, and obviously reflect that into the income statement for each period, you're going to be using different methods. You have straight line, you have units of production based on units, and you have double declining balance. There's other ones that you can actually use, but those are the main three. There's also a tax related depreciation sort of method, I guess I would call it, but it's not really a method. It's a whole set of prescribed tables of rates that you can be using. But for our purposes here, which is financial accounting, not tax accounting, we don't really get into that much detail. You just have to know that there's something called makers for tax. So learn about depreciation methods. Then you have LO3 for disposals. As I mentioned before, you have three ways to dispose of an asset. You discard it, you sell it, or you trade it. Now let's focus on the selling part. Notice that in selling, you're going to be figuring out the gain based on the difference between the sale price and the book value. Because you need to understand what the gain is or the loss, depending on what the situation happens to be, before you get into the actual accounting for them. So here's sort of the steps for how you account for the journal entry itself for the disposal through the sale of an asset. If you want more information or more detail as to what journal entries are involved here, you can always click on this link here. It will take you to a sheet that shows you. Right now, I cannot show you completely because it's not moving, but it will give you the a detail of what is the actual accounting for some of these things, for some of these transactions. Below here, you have kind of the same thing, but as it relates to exchanges. And that's actually the hardest part, the hardest topic in the whole chapter. So use the discussion forums to ask questions, especially as it relates to exchanges. And finally, L4 through 6, you've got some topics that relate to natural resources, which is something like lumber, forests, mines. And in that case, you follow kind of the same thing as you did for plant assets, except that you, instead of calling depreciation, you call it instead depletion. And normally you're using units of production as your method. For intangibles, you have the same situation where you don't call it depreciation, you call it amortization instead. And the method used normally is straight line. The thing that you need to sort of figure out is what is a useful life, because it's not just straight out what the useful life happens to be. It depends on whether it's there are other things that are in there. It could be legal life, it could be useful life. Always useful life, actually. That's probably the easiest way to think about it. Goodwill itself, it has another sort of thing to think about. You need to figure out what is actually goodwill. Goodwill is only possible when a company purchases another company for a price that is in excess of the market value of its net assets. So you have to figure that out. And then also something that relates to goodwill is that it is capitalized, but it's not. There's no amortization over its useful life. Because there's no useful life. We don't know what the goodwill useful life would be, so we don't amortize it. But there's something called impairment, so you need to figure out what that is in that section. And finally, as I said before, we're not going to be talking too much about this. Learn about this on your own in the book. Well, enjoy it, and I'll see you online.